So tell us a little about your portfolio. Why so few names?
So for a bunch of reasons. I mean, I've always had the view that why not own the best 10 or 11 investments as opposed to ideas 12 through 25 or 12 through 100, which is more typical. And I think there are very few great investments at any one time. So the ability to concentrate is an enormously valuable asset of a strategy. The problem with it is it leads to bumpier returns, and it leads to more attention on mistakes or things that aren't going well. I don't know a portfolio manager that doesn't have a stock that's down in his portfolio, right? But you don't read articles about. I mean, we're getting an awful lot of attention for a pretty high-profile situation that's struggling. But I think there's it depends on what your business model is. But if you want to make high rates of return over a long period of time, it's hard to do that being very diversified. I mean, if you look through the Forbes 400, wealthiest people in the world, most of them made their fortune in one business or a portfolio of two businesses. Very few made it in a portfolio of 100. So it's that. And the other benefit, it allows you to run a much simpler investment firm. We have an 8-person investment team. If we had 30 names, we couldn't manage that portfolio the way we do with a small team. By having a small team, you can hire better talent.
There's actually an argument that some people are now making that, buying the index or buying diversified funds have had much better returns than buying, those hedge funds that have, a very specific smaller portfolio approach like yours.
I haven't seen that article. I mean, I think we've done very well relative to any index alternative, certainly.
So,
I mean, it depends on how you judge us. I think if you judge us on a 90-day basis, I have no idea how we're going to do relative to an index. But I think this is a strategy that over time should earn a meaningful premium over, any kind of benchmark, or you shouldn't give us your money.
Yeah. And usually this investment philosophy, does it take a week, a month, 3 months to do the research, a year? I mean, you have 10 names. How long?
It depends. I mean, one of the best investments we ever made took us 4 hours to do the work. It was during the financial crisis.
Which was that?
Wachovia Corporation.
Okay.
So I was on my BlackBerry eating breakfast at the Brooklyn Diner in front of my building, and there was a story went across the. I was just Wall Street Journal headline, a Reuters headline, excuse me, went across saying that Citigroup to acquire the Wachovia banking subsidiaries for $2 in Citigroup stock. Stock was halted. And this was kind of an interesting transaction because they were buying the subsidiaries for Citigroup stock. I figured, that's interesting. What happens to the holding company? So I went back to, kind of went upstairs to the office and, cracked open the 10K and another member of the team, Mick McGuire, he and I worked on it. And what was interesting is the 1,000-page 10K of Wachovia Corporation, I think 900 pages were on the banking subsidiary. There was fewer than 100 pages on the holding company. By buying the banking subsidiary, Citi was leaving a holding company which had cash, in Wachovia Securities, A.G. Edwards, they had paid $6-7 billion for it 6 months before, Evergreen Asset Management, and they were taking a $27 billion loss on the sale of the subsidiary. And it also had a liability called non-cumulative perpetual preferred stock, which if you ever want to have a liability in your life, this is the single greatest liability to have. It's a form of equity where you never have to pay a dividend. And when you don't pay them, they don't accumulate. And the worst case is they get a couple of directors on the board and you say hi to them each meeting. And you have this and I said, look, this could be our Berkshire Hathaway. And at the end of the day, we figured the asset, in 4 hours, we determined the holding company was worth at least $11 to $14 cash, a tax refund that you could carry back the $27 billion loss, recover cash taxes that have been paid. So you have this cash vehicle, Wachovia Securities, which is a good wealth management business. Mm-hmm. You own A.G. Edwards, another interesting asset. These are businesses you know well. And the stock opened after it was halted at $1.84. So we said, look, it's worth 11 to 14, $1.84. We bought 42% of the volume for the next 4 days.